All right, welcome back, everybody. Today is February 18th. My name is Spencer Riegle. This is the weekly Bookmap podcast that we do. Let me scroll through over here. Apologies on my voice. I have lost it in the last 12 hours. So if anybody has found it, please let me know. But as I said, my name is Spencer Riegle. I am Chief Options Trader and Strategist at DARMA Capital Trading. You can find me at _RIEGLE on Twitter, or you can reach out to me specifically on LinkedIn. It's just my name, so Spencer Riegle. Before we kind of dive in, let's go over disclosure. Anything in which we talk about here today is not to be considered investment advice. Trading, futures, digital currencies, equities, stocks, forex, all have substantial risks. What we like to do and what we talk about specifically in each weekly podcast is about risk mitigation tactics. And the way in which we think about it is only trade if you have risk capital, right? We define risk capital as capital that you're willing to lose. Reason for that, there's a couple of reasons. Psychologically, it's easier to trade, right? If you don't have to pay your bills, then you don't have to force your will onto the market. Market doesn't really care what your will has to say. Two, in worst case scenario, if you do lose, it doesn't impact your life, right? And that is exactly where you want to be, right? So for those that have not or are unfamiliar with our weekly webinars, we go through basically an agenda, right? So what's kind of happened on a macro scale since we talked last, which we did talk last week. And then we dive into kind of our weekly outlook on price. We cover multiple different assets, and we actually just rolled out our new website. So if you get a chance, go over there and check that out. It's dharmacapital.trade. Let us know what you think. If you are in the Discord, feel free to drop any comments in there. Otherwise, there's contact forms on the website that you can reach out to us personally. So once we go through the weekly outlook, then we go into a bit of a strategy, right? So we talk about risk, we talk about opportunity, and then we overlay that with Bookmap, right? And we use Bookmap as kind of that microstructure of where that market is. So that's kind of how we do things here. So I am going to keep it relatively short while my voice has a bit there to give. Yeah. So specifically since last week, excuse me, there hasn't been basically anything. And that's kind of been the narrative. Yesterday was a U.S. holiday, right? A banking holiday. That was President's Day. Ethereum market was actually fairly active early in the morning in the later Euro session, and then totally reverted off the open, and then found its way back in just some range, right? And so overnight, we're basically sitting at unchanged, and so it's just a lot of noise. Continued narrative of kind of what we've seen in markets since Feb 2nd. And Feb 2nd, obviously, for those that don't watch crypto markets, that was the big collapse. And Ethereum touched briefly liquidations down into the 2,000 range, right? Same thing, Bitcoin, digestive. It's relatively neutral. And the market's kind of just waiting for direction to be defined. The longer in which lows kind of hold does open the opportunity for the trend to resume, and that trend is still intact, and that is a bull trend, especially in Bitcoin, right? Ethereum's a little bit different. Now that we're sitting around 2,600, that is a key level on some major time frames that we follow, but we cover basically the weekly outlook here in our weekly podcast, right? So let's dive into that. And see what that looks like. And let me get some water as well. I got some water next to me to make it through. So what you are looking at on the left is the weekly price map, and then what you are looking at on the right is the multi-book perp Ethereum markets, right? So for those that are unfamiliar, price map is our quantitative and qualitative data. It's existed for over 30 years now. It's transitioned in many different ways. One of those is it used to be in the pits, right? Just basically handout cards for traders that traded in the S&P pits back in Chicago back in the day, and then it's transitioned online as all trading has, right, for the most part. So what we talk about specifically in our weekly outlooks is the directional, right? We try to keep it relatively simple. There is a lot of context that the price map does define, but it's too much to go into in a 20-minute session, right? And so specifically, if the market is over the weekly directional, right, which is defined at that 2681.59, it is possible for an expansion higher, right, and a bull trade for the week, right? Now, if it's under that figure, our narrative is that the market is potentially at risk, right? Where could it go? And let's kind of define that for you. Weekly DP at 2460, that's a significant level, right? We see the DP up to the UP. We call it our critical range. That is where we see a majority of trade on a normal period, right? It's periods we define as daily, weekly, monthly, quarterly, and yearly, right? Because we're looking at the weekly here, it's super easy. Week starts Saturday, 0 UTC, and Saturday, 0 UTC, right? So that is what we expect a majority of trade to hold for this week, right? So 29, 14, 13, all the way down to 24, 80, 67, right? And so yesterday we took a stab at the upper range and couldn't do it, and we fell right back into digestive trade, right? And that's been the narrative for basically weeks now. So the markets have gone through that initial shock on Feb 2nd and then basically done nothing since that date, right? And so we've been digesting, creating positive price structure, creating a base, and that just takes time, right? And that time is a compression in vol. It is a compression in the expectation of expansion of the market, right? And so if the market were to trade incredibly bullish this week, let's say was to really buck the narrative and buck the trend, it would start here, right? This is the mid of the trade, the directional. Every expansion we see to extend or start from the directional, right? And so if it does, it should hold 2681. It should scale to 2797, right? And it should hold 2797. Yesterday's take at 2797 without a hold, that's not positive, right? That's continued to be digestive, continues to be the narrative, right? So really we need to see market space over 2797 before it really has a chance. If it has a chance, where would it go? 2914 would be normal, right? And if it were to expand on this narrative that it's created over the last couple of weeks, it would target that green level that you see on your chart up there at 3140.75. We expect 3140.75 to reject, at least for the week, right? And that would be a normal expansion of basically a change in the narrative, right? And the narrative is tight range. Every fade just gets, or every rally just gets faded, right? Every breakdown just gets faded as well, right? We've done basically nothing. And so when looking at Bookmap, let's take a look, right? So Bookmap, you see those resting liquidity bands sitting up there right at 2,900. That's in direct alignment with our expectation this week, right? There's resting liquidity up there. Markets like to take a stab at liquidity, right? So that could be, or that is a potential target if we can hold 2681.59. If the market's good, it should take it out and it should base over that level, right? If the market's bad, take a look at the Bookmap multi-book and make sure that resting liquidity, that resting offer up there lifts. If it doesn't lift, then the market can't get through it. And the expectation is we fall right back into digestive trade, right back down to 26.81, right? On the lower end, multi-book on the right is showing a little bit less, right? So you have some resting liquidity that looks at 23.50. We see that to be our weekly CRX minus, right? That would be a normal breakdown under the weekly DP, right? So if the market is going to go bad, it first needs to fail the 26.81 and then take a stab at 24.60. If 24.60 can't hold, here's your next level to look at. Taking a look at the liquidity that's resting with Bookmap, right? And so that's the outlook for the week with Ethereum, right? It's one thing to be hopeful that markets are going to scale back. It's another thing to recognize what's happening here and now. Basically, anything that is any breakdown that can't hold 25.71 as the overhead, and any breakout to the upside over 27.97 but can't hold it, it's the same narrative. We're just tightening the range, compressing vol, and frustrating basically the whole market. So, excuse me. Let's take a look at Bitcoin and see what we got there. So I have it right here. All right. Let's do that. And then let me make sure this fits. Cool. And then let me drag this over a little bit so that we can see the same thing. And then let's pull up Bookmap on the right. So the same thing. Bitcoin's a little bit different, right? So Bitcoin is still in the major trend really hasn't been tested, right? We're basically trading down to 94 and retrading to 98, and that's been the range. Same narrative. Market fell apart Feb 2nd. Since then, it's done nothing, right? And it's just digesting. It's creating a base. It's creating what is structure, right? And so that just takes time. And so currently we are under the weekly directional, but we cannot break the weekly CR minus, right? We came down, tested it yesterday, and we came down and tested it this morning. That is bullish, right? So it needs to be cautious because we are under the weekly directional. But if you take a look on the right, let's try to understand why that might happen. Well, you can see there's resting liquidity about 500 points down, 95, 94.5, 94 in Bookmap. And let me zoom out a little bit for us. 93, right? 93.5 has some, not as much as the bids higher, but there's a willing buyer down there, right? Now, same thing on the offer. 97, there's a band right there. 97.5 is not so much. 98, 98.5, 99. The offers are a little bit lighter, but they're still there. It's the same narrative that we have been seeing, right? And so it would be normal that we base at the weekly CR minus, and we call this a CR rotational trade, right? Basically, if you see the brown levels on the chart on the left, on the price map, a trade that bases at the weekly CR minus has the opportunity to take a stab at the weekly CR plus, right? It has to transition through the previous week's mid, defined by that PWM, and then transition through the weekly directional, that 97.361, and then test, right? Markets like to test ranges, especially when they're digesting, right? And they are basically figuring out what is fair price, right? And so fair price is exactly what the market's been defining, which has been this range, right? And so if the market can't break 95.37, first take it needs to take a stab at is the weekly directional, and the expectation is it bases over that. If the market's good, then the market should go and take a test at the previous week's high, which is 99, roughly. And then the weekly CR plus, which would complete the weekly CR rotational trade, is sitting right at 99.5, right? If the market is really good, it'll take a stab at the weekly UP, which weekly UP down to the DP, that's where we see a normal range of trade to be on the week, right? So 101.713 all the way down to 93.380. The simple fact that the market can't break the weekly CR minus so far, and it's taken 2 stabs at it, leads me to believe that the CR rotational is still good, right? And so there's always a what if in markets. So yes, absolutely, if the CR rotational is good, then you got to think about higher levels as well, right? What if the market is better than good, right? What if you get a base over the previous week's high and it takes out the weekly CR plus? Well, the next level would be 101.713 to complete the upper end of a normal range on the week, right? So those are key levels to watch for the week. If the market can base here, which is basically the lows of the current session, then it has a shot to go higher, right? And that first target is 97.361. We could get that done before midday Chicago, right? If the market's great, we might have a shot at 99.537 for that full continuation today, right? And if the market is exceptional, then that 101.713 does come into play. So that is the weekly outlook. I know it is pre-market time in the US. I'm actually in Europe right now, so a bit of change of pace. So it does help to get these out early for you guys, so that we can monitor this stuff in real time. So thanks for hopping on. Feel free to stop by our new website. I'm going to pull that up again. Actually, yeah, feel free to stop by our new website. It's DARMAcapital.trade, and get in contact with us, or take a look at what we have to offer. So appreciate it. Enjoy the week, and good luck today.